I understand where they're coming from, sovereignty, self-sovereignty, and all of that. And I agree with it, but there's just no way that you're ever going to have Bitcoin grow to a certain size without having institutional involvement. It's just the reality of the situation. It's because of the way our money systems are set up. It's just what it is. So I take it as ultimately as a positive net, and I'm again my hedge fund. We own MicroStrategy, and we're not selling any, and it's not upsetting me. It's just what it is.
What if Michael Saylor selling Bitcoin isn't bearish at all, but one of the most bullish signals yet? Investor James Lavish says the market is completely missing the bigger picture. While many panic over a few Bitcoin sales, Lavish argues that institutional adoption, index inclusion, and corporate finance strategies could ultimately drive Bitcoin to unprecedented heights. Is Wall Street's involvement the threat Bitcoiners fear, or the catalyst that sends Bitcoin into its next massive bull run?
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
Going back to the Saylor narrative, I was on that call. We asked him questions about selling Bitcoin and what his philosophy was about that, and he made it clear that there as an individual, if you buy Bitcoin and you put it in cold storage, you want to hold on to it and not sell it. As a company, you have to maximize your ability in corporate finance to create more Bitcoin for underlying shareholders. And so that sounds counterintuitive when you hear that, you wake up Monday morning and you see that Michael Saylor, with the company that owns the most Bitcoin, turned around and sold some after telling you never sell your Bitcoin. It sounds like it sounds pretty negative on the surface, but if you stop and you pull back and you actually think, and you don't just react emotionally to it, you heard him say he wants to inoculate he wants to inoculate Wall Street and retail from him having the ability to sell Bitcoin, and he might just do it to kind of set people straight and show people, don't panic, the Bitcoin's not going to drop to $10,000 if I sell some. And why would he do that though? Well, he does need cash to pay dividends. He can sell some higher cost Bitcoin at a loss and then turn around and buy it, and it strengthens the balance sheet on a tax basis, number one. Number two, he's showing ratings agencies that he's willing to sell Bitcoin in order to pay dividends on these securities. And why does that matter? It matters because they need a rating. And well, they don't need it, but it would be nice for them to have a rating in order to be included in the S&P 500 index. Why does that matter? Because we're seeing we have to probably talk about Tesla and SpaceX here at some point, because it's going to matter when you get included in an index. So much of just everyday movement in the market is dependent on ETFs moving in and out, and ETFs are being bought by retail, they're being bought by IRAs, and some 401ks. And so these indices are extraordinarily important, and it's not, and 401ks are still buying mutual funds, which are essentially indexes in most of them. And so, it really does matter. And I take it as a positive that he's willing to do that, show that he understands corporate finance, and that it ultimately will be better for the underlying shareholders. Now, this morning, you see that Bitcoin's reacting pretty negatively to it. And I think that that's a lot of what you're seeing in the price action of Bitcoin this morning has to do with it. And look, you've got holders of Bitcoin that have been around for a decade, and they're getting a little bit fatigued with the whole situation. And there's definitely a a faction, as you know, as all you guys know, but Scott, you really understand this from talking to these guys every single day, that there's a faction of Bitcoiners that believe it's freedom money only, and they don't want Wall Street involved in it. And they, which I understand where they're coming from, sovereignty, self-sovereignty, and all of that. And I agree with it, but there's just no way that you're ever going to have Bitcoin grow to a certain size without having institutional involvement. It's just the reality of the situation. It's because of the way our money systems are set up. It's just what it is. So I take it as ultimately as a positive net. And I'm again, my hedge fund, we own MicroStrategy, and we're not selling any, and it's not upsetting me. It's just what it is. Just put it in perspective. If he was to sell 10% of his holdings, that would be, we're talking about 80,000 Bitcoin. Like, this is like selling a few Bitcoin is just exactly what you just said. It's just a little bit of a pinprick to say, look, we'll do it, and we'll show you that it's okay. And if he's buying it so well on the way up, he'd be able to sell it similarly on the way down. And it shouldn't impact the market, except psychologically, people they're just bent around this concept that, well, he lied. He said he'd never sell it, and there's two different communications there. And as the CEO or I'm sorry, he's not the CEO, he's the chairman of the company he founded, and he's running this strategy. He's got to show the market that he's willing to do exactly what you just said. That's right. So, and it's just a reality of the situation. He's got STRC is backed by the Bitcoin on his balance sheet, and he's showing that he's really backing it. And so that's what it is. If you're Jamie Dimon, you don't want to turn over your free deposits, basically where you're paying no interest on them. Then you're taking that cash, you turn around, you can lend it out numerous times, in the fractional banking system. Why would you want to be in a market now that is, allows you to pass on the yield from your stable coin, which is ultimately, for people who are listening who don't know what we're talking about, stable coins are pegged to US dollars. Tether's pegged to US dollar, USDC is pegged to US dollar, which means that they have to have fungible securities that can turn into dollars on a dime, right? So if they need dollars, they can just turn around and turn them into dollars. They act like, so what do they use? They use money market fund tactics. They can use the repo market if they want to. They can buy short-term treasuries, T-bills, and that just provides liquidity to the U.S. government. So there's a push and pull here. The government is saying, and they understand, they're like, we need stable coins. We need Tether. It's one of the largest buyers of treasuries. And that is why, Mike, it's becoming the one of the largest cryptocurrencies. Obvious. You know that. We all know that. And so the Treasury is pushing hard for these provisions to get done so they can find pockets of liquidity all around the world. And, Jamie Dimon and the other bankers don't want a provision that says that they can pass on yield to their customers, because that will just cannibalize their massive margin product of deposits, literally just turning into cash cows for them. They don't want to cannibalize that. I get it. I understand it. But the reality is, there are agreements that USDC has with, I think they have an agreement. I don't know if it's still going on with Coinbase. I saw it a while ago where they were offering
Coinbase makes more money on USDC than Circle does, I believe. Or at least there was a point where they did. Yeah.
So of course that's what they're fighting. And are the bankers going to win? Probably. They'll probably win and get some sort of ruling that says that they are not allowed to. They're restricted against passing on yield to their customers, and that way they ring fence their deposits. They just move them into this, and they turn around and fractionalize this instead. And so that's kind of where I think that sits. Now, the more important question is timing of it, because if we can't get this done in the Senate by July 4th, apparently it's going to get kicked to the curb until 2027 at the earliest. And so, that is a challenge
with
this
Democrats having at least one house, most likely, right? So it's a different environment also for trying to do it. I think
completely different environment, because then you have the Democrats who have, historically been anti-cryptocurrency, and it's become a political thing. It shouldn't be, but it is for whatever reason. So that is a challenge for sure.
James Lavish begins by addressing a controversial topic that recently rattled parts of the Bitcoin community: Michael Saylor's willingness to sell Bitcoin under certain circumstances. At first glance, this appears contradictory. Saylor has become famous for promoting a never sell your Bitcoin philosophy. Therefore, when investors hear that Strategy may sell Bitcoin holdings, the reaction is often emotional and negative. However, Lavish argues that investors are missing the bigger picture. The key distinction is between an individual investor and a publicly traded corporation. For individuals holding Bitcoin in cold storage, the objective may simply be wealth preservation and long-term appreciation. But for a corporation like Strategy, management has a fiduciary responsibility to maximize shareholder value. That means using sophisticated corporate finance strategies to increase Bitcoin ownership per share over time. Lavish explains that selling a small amount of Bitcoin doesn't necessarily signal bearishness. Instead, it can serve multiple strategic purposes. For example, raising cash to pay dividends, improving tax efficiency by realizing losses and repurchasing assets, demonstrating financial flexibility to ratings agencies, strengthening the company's eligibility for inclusion in major stock indexes. These actions may ultimately benefit shareholders far more than rigidly refusing to ever sell a single Bitcoin.
One of the main provisions of the Genius Act, as I understand it, is that there will be required audits for all these stablecoin issuers. It's a different thing, because back in the day of FTX, Tether was like, yeah, we're doing it. We'll just tell you that we're doing it, but there's no proof, right, that we're buying stable US dollar based assets. But now if they want to operate here in the US, they have to. You already have what's considered the gold standard of auditing for its stable coins, which is USDC and Circle. It's a private equity group led company basically, and they understand it. It's based here in the United States. They get it, and so that is an important thing that they're going to have to demonstrate that they have what they say on their balance sheet, that is pegging this stablecoin to a US dollar based security, basically, or basket of them. And so that brings down that risk of what you just described incredibly. That brings it down, not to zero, but it brings it down quite significantly. And so it becomes more of a non-zero probability that you have something blow up because they don't have the right asset. The US Treasury wants this. And if they want it, it's going to happen. They want it because they need pockets of liquidity. Period. That's happening. It doesn't matter. But what's more interesting, and that's kind of that path. But what's more interesting now is turning to the markets. And this is a really important part of the macroeconomic backdrop right now, which is this: we have a company that's coming to IPO in the next few weeks, the next 2.5 weeks in SpaceX, that is literally changing rules for the SEC to bring this thing to market. And this is something, for me, this is a little bit of a canary. And you're talking about this wildly popular IPO. That's the first step. You've got SpaceX, you've got Anthropic, and you've got OpenAI are all coming soon. And buckle in, because this stuff is this is something this is a dangerous moment for us. And why
I mean,
is
they're
that?
stuffing it into index funds, like violating all the previous rules that they had, basically. So everybody, you get SpaceX, like Oprah, you get SpaceX, you get SpaceX. You get SpaceX.
And removing the lockup of IPO shares, like, pre-IPO shares. Pre-IPO shares. I mean, this literally allows the dumping of shares for retail to become exit liquidity for the founders. Like, it's an important thing to notice here. And why is it important? It's because I think how much is coming? 75 billion, Mike, Dave, like, we're talking about just a tiny fraction of the $2 trillion valuation we're looking at here. Now, why is this important? It's important because I am literally getting phone calls from friends and family members on, how do I get into this thing? I need to get into this IPO. I want some shares. I need some shares. And you're like, hold on. Do you understand what the valuation is here? We're talking about, something that we're talking about 90 to 95x sales IPO. Like, that's what the multiple
Less
is.
than 100, James. Buy it. Sorry.
I mean, like, right. Like, that. This is the point. It's like, but the retail doesn't understand. They don't understand that. They don't care. They just want it because they think it's going up. And they're probably right for the short term. But the problem here is, does this kick off this ridiculous blow off top that turns into the bubble of, this AI just feeding frenzy? Why is everything AI related up, up in the market? Because you can't buy the actual thing yet. You can't buy the Anthropic or the OpenAI. So people are buying everything around it that they can, the picks and the shovels, and it's anything they can get that is related to it, and they're buying it up. And so that this gives you an indication that these are going to be wild IPOs, and it could cause a cascade on the other side. That's what worries me about the market. That right there. And the SpaceX IPO and the way these rules are changing around it, and it's going to force S&P indices, and trackers, whether the ETFs or mutual funds or whatever, to buy this thing, because it's going to be it's wild. And so this is something that's going to be important in the next 2 weeks. Like, buckle in, people, because I'm not so sure that's going to turn out the way that there's a little bit of zero sum here, because you're moving this hot ball of money from one asset class to another, and it's moving around. So it's going to move somewhere. And so when something is out of favor and something else is in favor, and then it moves, something is out of favor, something is in favor, it moves around. It's like it just disappears, Now, when you do a cascading liquidity event, it can all disappear. That's the scary part, is when everything washes out. We've seen that happen 1987, 1998, 1999, 2000, 2001, 2008. Like, we've seen all this movie play like a number of times. This is not something new. But, the ball of money is always around. It's just, where is it headed? And so, this is what concerns me about these IPOs that are coming to market right now. And so we're going to see, how much appetite investors have for insane amounts of risk on the back end of these valuations. Because what was the next closest, highest valuation of a stock that came to market? I mean, there was like 6 times sales, right? Not 90. Like, this is just, it's ludicrous level. So
Lavish also highlights a growing philosophical divide inside the Bitcoin ecosystem. On one side are Bitcoin purists who view Bitcoin primarily as freedom money. These investors emphasize self-sovereignty, self-custody, independence from traditional finance, resistance to Wall Street involvement. Lavish says he understands and respects this perspective. However, he also argues that institutional participation is unavoidable if Bitcoin is going to reach its full potential. The reality is that modern financial systems are built around institutions. Pension funds, sovereign wealth funds, insurance companies, banks, and asset managers control enormous amounts of capital. Without institutional adoption, Bitcoin's growth would likely remain limited. Lavish believes the path toward a multi-trillion-dollar Bitcoin market requires embracing institutional capital while maintaining Bitcoin's decentralized foundation. In his view, Wall Street participation is not a threat to Bitcoin's success. It is part of the mechanism that enables Bitcoin to become a global reserve asset.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.